Hey everyone, this is Rahul with the Alternative Investors Hangout. It's been a while since I've done a podcast, but I'm bringing on two guys that I follow closely. There's Don from the Day Trade Show, and then there is Panama Orange. Thanks for coming on, guys.
Thanks for having me.
Yeah, I'm here.
Although I wish you would refer to me as my new name. If you
Silver Cobra.
That's right, Silver Cobra.
That's right, Silver Cobra. Anyways, out of all the people out there that I follow, both of you tend to be, I would call bears, and I would say that I'm a bear as well. And everyone is really, really positive about the market. So I wanted both of you to chime in on what do you see going on. Don, what's going on?
Well, first of all, Jim Cramer last night, and I do recommend people do this. He did a clip last night that I saw on Yahoo Finance. I guess Yahoo and now and CNBC are in cahoots together or something, because there's a lot.
Yeah.
And it was Jim explaining why all the folks who are negative on the market the day before yesterday, they were wrong, and it's blue skies again. There's reasons to like this market right now. And so thankfully, we got the Jim Cramer overnight deal, and the market got hammered today. So now that bit of both truth and sarcasm aside, I think that the things to look at are the momentum indicators that I follow are all overbought. You've got the lowest market participation that I don't remember, and maybe Panama can chime in on this. I don't think we've ever seen per capita lower actual trading participation and volume. Yet we have the highest margin debt. Tip my hat to Panama for that information. We've got stocks at highs for every time frame you can think of, basically. And all of this in an economy where, again, moms and pops don't have the money to start diving in. Why would we think that the market would go higher from these levels? And it's also not fair to say that, well, bears have been claiming this all the way up. All right, I have not been claiming this all the way up. I didn't hold stocks all the way up, but I've been trading in and out. I'm just saying that now it's a wrong time, in my opinion, to be loading the boat for a number of reasons. And I'm not claiming that the market's going to disappear. I'm not calling for a 90% correction. I'm not saying 1987 style disaster. I'm just saying I don't think it's a good time to be buying right now for a lot of metrics that I don't think it takes a rocket scientist to see. And finally, the bullishness now. And again, I got to give credit to Panama for this. He pointed this chart out to me a few weeks ago. The level of bullishness has never been this high. So, high bullishness, high charts, low volume and participation, crazy margin debt, stocks at all-time highs. I'm not touching it. There.
Panama, you want to add it to what Don said?
Yeah, well, thanks for crediting me on sharing that info with you, Don. Although a lot of the research that was done on sentiment and margin debt, that's other people's. I was not out there personally drawing those charts myself. It's just things that have come up over the last few weeks. And there's so many warning signs in margin debt and sentiment and all these record highs in all of those categories. I do think, another thing that people like Harry Dent are trying to emphasize is demographics and the fact that we do have a huge population of baby boomers who are now looking at a parabolic market and have to decide, are they going to hang on for, try and gamble for some more upside, or are they just going to cash out and go buy a retirement home somewhere in the South? And I think keeping those baby boomers in the market with the parabolic, ridiculous tech stocks that they're trying to give us leadership for right now is a near impossible task, because those same baby boomers were the ones burned in the tech bubble in their prime earning years back around 2000. So that's sort of seared into their consciousness. And now you're trying to say...
And Matt, I want to add something to that before you move on from that point.
What?
Forgive me for interrupting, but I want to throw this out there.
Please, go ahead.
My mother-in-law is 70, almost 70, and my father-in-law died in 2008, so that was 6 years ago. And she watched their portfolio go from what it was in 2007, and the last thing she wanted to fool with in 08 and 09 was the portfolio that that they had at Edward Jones because, I mean, you're dealing with the death of your husband, the love of your life for 40 years. It was the last thing she wanted to deal with. And so it was difficult watching that drawdown. And, you know, recently I talked with her, this is last week, and I said, look, think about where you are right now in your life, and think about how far you've come from where you were in terms of your finances and everything. And I said, look, I'm not telling you to sell everything. I'm not even telling you to sell. I mean, there are things you can do where you can even hold your stocks if you want to and cover your positions with options and things like that. But I said, you know, you really need to consider this. You could cash out now if you wanted to and live until you're 100 and you'd be fine. Now, to Matt's point, this is not just about my mother-in-law. To Matt's point, my mother-in-law said, you know, I've already been thinking about that. I don't think it's necessarily a bad idea, and I'm not going to let anybody talk me into holding something now if I believe it's the right thing for me to do to take some off the table. And that is a much different sentiment than I heard from her at Dow 14,000 7 years ago. It's a radically different sentiment. I don't know if it's the same across that entire demographic, but I suspect there's a lot of folks her age that are looking and they're saying, why would I want to participate in this? And those are the ones that have the money to participate.
Indeed. I mean, if you look at all the older people that I talk to, I mean, they used to be buy and hold guys, but now they're looking at two bubbles in their lifetime, in their peak earning years, like you said, 2000, 2007, 2008, and we could probably see another drawdown of probably around like 25, 30%. That's what smart money's telling me right now. And if you look at that, they may say, hey, you know what, maybe it's time to take some profits off the table, and then, I mean, there are some other things that they aren't aware of. I mean, the yen carry trade is starting to slowly but steadily unwind, which I've been noticing, and guess what? The market has been going down from there. So there are a lot of factors.
And also, we don't have to see, you know, imagine that you are retirement age or you're in, you know, in your senior years where you've got statistically 10 or 15 years left and you need that money to subsist on in some way. Well, even a 15 or 20% drawdown might be painful for you. So why would thinking people, and with money to do so, opt to get in? Now, for a historical perspective on this, my grandparents, they never trusted the market, and for all of their lives, until that generation was gone, there were people out there that just didn't trust banks, didn't trust brokers, etc. And it took a lot of scandals along the way, a lot of people getting burned, and it took that generation dying off before we saw the real grift and the real shakedowns in 2007 until now. And I think there's a generation of people that are seniors now that aren't going to get in. I didn't, until I had that conversation with my mother-in-law, I know Panama's talked about this, I didn't really viscerally see it with my own two eyes, but I think Panama's right about this.
Well, Harry Dent, really, he's written a whole book about this exact principle, and it's funny. He's said for years 2014 is about when that tidal wave of people saying, that's the baby boomers saying, that's it, I'm heading out the door. But here's the funny thing. If I was talking to you right now and the Dow was like 12,000 or 11.5 or something, I think a lot of those baby boomers, because of that psychology of I want to hold till it gets back, might not exit because they want to think, well, if I just hang on, maybe I can get back to where it was in 2007. But instead they're being given something that's near parabolic. And back to your point about CNBC, they will come out after a 2% drawdown in the market and tell you what a great buying opportunity. Get out your shopping list. You're getting a chance. You're getting this big discount. And
what are they saying today?
Pretty much the same thing. I mean, there was some obvious panic and there was some, hand wringing. But they were saying yesterday about how you missed your chance, like Don said, to buy the dip and get the discount. And I've seen this before where all the way down, like every 2%, they'll say, my God, get out your shopping cart, get out your shop. They'll say it all the way down, and then you'll know you're near a bottom when you have the Sunday night special with Kramer with his sleeves rolled up and Deca box, and kind of like a video you were doing earlier, Rahul, where you were talking about when they have all those famous bears back on, many of which, by the way, here's another indicator, a lot of quote-unquote famous bears and bear rock stars have either capitulated or they've gone kind of neutral, like Rubini. Rubini isn't nearly as bearish as he used to be. In fact, he'll say, well, we're probably going to go down.
Doesn't he change his mind often, though?
He's
I mean, sometimes
so
he says that, hey, it's going to go... Go ahead.
He's so wishy. He's like, well, we're probably going to go down, but I don't know when. And a lot of bears are the same way. Who's that one famous bear who looks like Elvis Costello with the glasses? Trying to remember. Hugh Hendry. He famously capitulated a few months ago and was buying like 3D printing stocks and Bitcoin, and Zero Hedge was making fun of him kind of rightfully. I disagree with Zero Hedge a lot, but they're right for him to be bearish like all the way up, and now he's buying Bitcoin and cloud stocks, all this garbage, and it's like there aren't many bearish rock stars left. But when they do find a few, like Faber, who they had earlier today, but they're still not. They don't have that spotlight, that celebrity spotlight, like they did near the 2009 lows.
That's exactly right. They don't have that yet, and really, we're a long. I mean, in terms of nominal numbers, we may be a long way away. But I'm gonna disagree with you on this. I don't think when they bring the rock stars out, that's the bottom. I really don't, because they'll bring the rock stars out down 1,000 points from here.
Yeah, they'll be early. I think the real rock bottom sign is just like in the near the last major bottom a few years ago, was when you get Kramer and these other guys saying, we got to change the rules. You got to bring back the uptick rule.
That's right. But wasn't that like November of 2008? That's what he was saying then. Yeah. I mean, like
that's when he said that you had to liquidate everything you needed. If you needed any money for the next 5 years, you had to.
Yeah, that was November of 2008-ish, or around there.
By the way, as we speak right now, Matt, you brought up Bitcoins.
Right.
Bitcoin's right now, 24-hour low, 354.19. It's at 354.19 right now. And it's not just the 24-hour low. It's the low all the way back to last November. So literally giving up now from the highs, 70-something%, down $900, a total decimation of Bitcoins.
You know who's going to comment on that?
What,
Don?
On what I just said?
Yeah, Johnny Blaze is definitely going to comment on that.
Oh, yeah, that guy's always coming. Well, I mean, it's remember, it's different this time. So I expect.
It's funny. You got guys like Max Keiser championing. Now, in addition to Max Coin, he was a big fan of Bitcoin as well, right?
And silver.
Right. And it's funny. This is something that needs to be brought up that just is mind-blowing for me. How Russia became like the darling of the libertarian internet sort of YouTube type movement, the quote unquote freedom movement, without any emphasis or any mention of the fact that Putin is extremely anti-gun. He has outright come and said, no one should own handguns.
Well, if you think about it, the Russia Today, we should be just like China mantras, the end of the petrodollar and the magnificence of the yuan and gold and silver international standard and all this. This whole thing speaks to a demographic who would tell you at the beginning, if you go back 5 years ago, they would have said they were Constitution-loving patriots, just interested in liberty, right? Well,
now they're interested in Quarks, Max Coin, and if you ever bring that stuff up, then they go ballistic on you, or they hit the thumbs down on your videos.
That's exactly right. So now when you talk about Constitution and liberty and sovereignty of this country, now suddenly you're the enemy. You don't get it. It's different. You don't understand. And speaking of Bitcoins, now another new low as we talk, and Quark, well, I'm not...
I thought Bill Still said that this is going to be the best new thing, right? Back in December?
Well, no, it was November of last year, and Bill said, just go get you some, because this was the start of something new, and you didn't want to miss out. He felt like you just could not, you didn't want to miss out, and I guess if you're a long-term Quark believer, having it retrace all the way back to his first comments, I guess you got a chance to get some, right? So it's a buying opportunity.
I don't know if you caught one of my videos. I had one tweet of Max Keiser. I should pull it up, but what he was saying is that basically, let me get that out. I could show you that later on. But he was going all ballistic over Bitcoin, Maxcoin, and all that stuff. But he wasn't talking about gold and silver. And then all of a sudden, gold and silver have rallied, and all these cryptocurrencies have just fallen off the edge of a cliff. I don't know if you've noticed that.
Well, I wouldn't say gold and silver have rallied. I mean,
Yeah.
Silver's at 20 and gold's at 1,300. Not exactly, scalding moves.
Right.
Now, speaking of Max Keiser, have you seen the Maxcoin price action?
I think you just showed me that.
Yeah, but I was just setting you up for you. You were just supposed to say, "Oh yeah, I saw it." Yeah. I mean the Maxcoin down 95%. So I guess another buying opportunity. I don't.
Yeah, stack the smack, right?
I don't know.
Well, I want to see where he gets his Russia Today paycheck converted to Maxcoin. That would make me a believer if he held it up in studio and showed me how. He only accepts his own currency, which would make sense. If I had a currency named after myself, that would, be my...
Let me ask you guys, philosophically, I mean, if you have one of these things named after you, and it drops 95% in a month and a half, I'm trying to process that. Like, what does all that mean? Is this a buying opportunity? Is that what you would? I mean, what do you think, Rahul? Is this a time to buy the Max coin?
Of course, man. Stack the smack.
All right. Okay.
No, I'm just joking. But the thing about Max Keiser, I don't know how he sleeps at night doing all these pump and dumps. To be honest with you.
Well, I don't know.
Unless he truly believes in it, but. He's not that dumb. He used to be like the top options trader in New York in the late 80s, when he's like 27 my age right now.
And you know that because what? Is that because you heard him say that?
Yeah, I heard him say that. He used to be an options trader and a broker or whatever in New York. He used to be a top dude in Wall Street, but then he left.
Okay.
Well, technically a lot of the guys on CNBC are top experienced traders, and yet every day I just the deer in the headlights look, and he's strange. Bob Pisani, I don't even know. Does he have a college degree, by the way?
Well, hold on. I'm looking at Max Keiser's Wikipedia page. It says, after studying theater at New York University, he took a variety of jobs, including stand-up comedy and radio. He then took a part-time job as a stockbroker in the 1980s at Payne Weber and Oppenheimer, at a time when it, quote, required no talent whatsoever to make gobsmacking amounts of money, end quote. I don't know that qualifies him as a top options trader on Wall Street. But maybe this could be this. Maybe this is wrong. I don't know.
Well, does anyone really take him serious? I guess he has some sway to an extent. There's bigger fish in that pool in his compatriots, like, say, the Alex Jones show, and which he is a guest of occasionally. I think, you know what? Then again, I haven't seen Max Keiser and Alex Jones in a while.
He came on, I think, a few weeks ago. To tout like some 9/11 insider trading thing or whatever.
Hey.
Well, back to the point. All this stuff, it's frustrating because there's two arguments or two discussions to have. One is philosophy and one is practicality. And on the philosophic side of it, people conflate those two things. If you say, hey, listen, you should wait to buy that, then suddenly you're the enemy of the practicality of it. Like suddenly if you say, listen, you should wait to buy that. Maybe you want to wait for a pullback, then you don't get it. You're in league with the banksters. What are you talking about? That's the part of the conversation that's been frustrating for me. I could even be convinced of some of the efficacy and some of the efficiency and some of the practicality of some of these, quote, cryptocurrencies. But you're going to have to divorce yourself from the emotions. And I just don't see any indication that the next thing that comes around will be any different. It'll be the same emotional ups and the same crash. Right? I mean, why?
The thing is that how do people continue to go to Max Keiser? I mean, if they got burned once, they learned their lesson. I learned my lesson first time around, but I don't know how the hell he still has a lot of people go to him. I mean, you showed me the Google Trends the other day with Max Coin.
Right.
And it surpassed.
But that's exactly right, though.
So is he getting it from like the Alex Jones crowd, the newcomers to there, and these newbies? Is that how it works?
I'll tell you what it is. If you're a bully in that freedom, truther, libertarian circle, if you're a bully, you will get people to glam onto you, even if you're inaccurate or even if you make mistakes. They like falling in with someone who has that personality type. It's kind of like Keith McCullough on Twitter, who is this crazy, weird sociopath that just goes around constantly praising himself every tweet and flipping in and out of positions every 5 seconds and contradicting himself. But he has people that just fawn over him. You know, most people think he's a clown, rightfully, but that it's a certain type of personality that just attracts toadies and weak people that just like.
But don't you think that another thing could be that the people that were into the crash J.P. Morgan thing, that whole silver thing, that's a different person who's in the cryptocurrency thing by and large. I'm not saying there aren't people that cross over in the two areas, but the Max Coin thing is such a bigger phenomenon. It doesn't seem that way to us because that's not our deal. But outside of what we talk about, there's a lot more folks interested in these cryptocurrencies and precious.
I don't know who the hell even wanted to buy that.
Well, what I'm telling you is it's a larger audience than there's way more people that are interested. I'm just telling you in cryptocurrencies and precious metals. That's it. That's not a surprise to me. And plus, he has a much bigger audience than he had 3 years ago. So he just has a bigger audience too. I mean, I don't know. It's frustrating because the demonization that people like Max Keiser did to people really muddy the waters in such a way that there's not really a way to have a conversation without talking about the emotions of it all. I just think, I don't know. Again, maybe it's a buying opportunity.
Yeah, I mean, it's as you were talking about, as far as people who constantly push those to buy spikes in silver and buy at the highs, which realistically we do have to include zero hedge, even though, that's one example, by the way, of an organization on the internet, a paragon of the alternative news sphere that is actually makes some really bad trades. Because, like I noticed last week, and I said this in a video I did with you like a week ago, Don, that all the commenters in Zero Hedge now just loving stocks. You will read 200 comments of guys just buy the market, it's never going down. And they're not being sarcastic. They'll come reason after reason. And then the market goes down, and they start applauding and patting each other's backs, saying, well, of course, we knew it was going to blow up. It's rigged. So it's like, I mean, that's, good God. It's
well, I mean, what we're witnessing here, this to me, look, we have been able to watch the tech bubble get demolished. We've seen the Dow get hammered not once, but twice, just totally hammered, from 12,000 or 11,000 and change in 2000 to 7,500 in 2003. Then we saw it get crushed from 14,000 to 6,500. We've seen the silver parabolic and then crushing, gold the crushing. We've seen now Bitcoins in the crushing, Quark in the crushing. And we've just seen these over and over again. What is stunning to me is I'm telling you, Rahul, the next thing that comes around the corner, we better figure out a way to get on board and figure out which one it is to take it.
Or why don't you just
the funny
take the
thing
short
is that you left
position of
out
that?
the recent biotech absolute crushing, which quite a lot.
Yeah.
Which
another one, the 3D printing thing.
And
if you want to look at stocks like Facebook, Twitter, and all that stuff as well, those high momentum.
Yeah, Twitter, another disaster. I don't know, man. I mean, I don't know that surprised is the word. It is, though, like there's a wealth of information out there where people you'd think would say, okay, this time it's not going to be different. It's not going to be different.
It circles around to what I was saying like 7 minutes ago, and that was the baby boomers, the only way the market doesn't crash, going back to like Harry Dent's book, who writes about that, all that capital tied to the baby boomers' pockets, is to keep them in the market. And I don't think there's a generation in the history of humanity that has seen as many bubbles as this generation has in the last 12 years, or even like the way that the bubbles seem to be accelerating and breaking faster in the last like 6 months. And all that trauma, getting those people not to cash out, I don't know how they're going to do it short of, like I said in the last video we did, having stocks that specifically cater to people that are like 65 years old, something that
we talked about that, but I upon reflection, I know that there was some humor in what we discussed there, but I don't even think that's going to work. Because I know when I talked to my mother-in-law, dude, she was just like, I mean, and you have to know my mother-in-law. I mean, she is not someone to say things lightly, and she was not in any way impressed with wanting to stick around to see Dow 30,000 under any circumstances. I mean, I'm saying there's a lot of people out there. Now, this would normally be seen as not the sign of a top, but the sign of a bottom, except for the fact it's at Dow 16,000 and change. So in other words, if she was saying this at Dow 6,000, I'd be saying push in your chips, but she's not. And
to that extent, the contrarian extent, the problem is the other generations, the millennials are broke as hell, and the Gen Xers are barely treading water, and so still a lot of them can't pay down their old student loans, their car payment, the gas prices that are going up every day, the grocery prices that are going up every day. So if all the baby boomers say, I'm out of here, there really isn't some other generation sitting there ready to come rushing in and buy what they're selling, which is kind of something people traced out a decade ago and 15 years ago, that about this time in 2014, with this mass wave of retiring boomers, who is going to pick up that slack as they go up the door financially and jump into this market? And man, it's hard to see, but I do need to emphasize that I don't think we're going down in a straight line. I don't think like the crash that we had today is just going to go down at a 90-degree angle. In fact, this week, I waited all week specifically for the bounce yesterday to start shorting again, as I IM'd you and Skyped on, and I posted on Twitter and StockTwits. So I do think...
Right. I mean, by the way, just so everyone understands, Matt did email me, or no, he got me on Skype, and he did say 3 days ago, before the move up on, I guess, Tuesday or Wednesday, he said, dead cat bounce from this buy, and he said that, and it happened, and so...
Yeah, it was on his StockTwits
yes.
profile. He's like one of the only guys I follow on StockTwits who actually makes sense, by the way, compared to all these other crazies.
Full disclosure, Matt is right about that. He did say that. By the way, just real quick, Bitcoin new low, 352. Go ahead.
Well, my point is, we will have bounces on the way down. I don't think we're going down in a straight line. I think what we saw with the Fed overreaction last week and this week shows you how the market just worships. Every time the Fed opens their mouth, they send stocks up at a 90-degree angle. Happened two weeks in a row. And, that's not the last jawbone we'll see. But I will tell you one thing, and this is very, very important. And this is a pattern that I can't believe more people have not noticed. And you can go look this up or just think back what's happened in the last 5 years. The Fed never acts in spring or summer, ever. During the flash crash, they were silent. During the 2011 downgrade crash, they were quiet. They always come back late August, early September, and that's when they might or might not do something. But no matter how bad things get in the summer, they don't come back. And there's a simple reason, and that is the billionaires and all the big money they serve take their 4-month vacations, 4.5-month vacations very seriously. And they don't want to have to come back to work to man the trading desk or call in orders when the Fed does QE, in July or June. So I do think this people who think that the Fed is going to come in with more QE in spring and summer, when they have never, as far as I know, and someone, if you want to find a spot where they've done that, I don't see it. So I do think that's a very reliable pattern that between now and September, the market's on its own, and it's on very thin ice.
Can I ask a question, Rahul?
Yeah.
So I'm at Silver Doctors right now, and they have a blowout sale. Silver at 65 cents over spot, any quantity. Now, tell you what, 65 cents over spot, not a bad deal, you know. But how does this jive with every story they told about shortages and, you know, I mean, I don't know, man.
You should maybe email him, man, and ask him.
You think I should ask him? Okay.
Yeah, you should email him. I think I could give you his email.
Well,
outside.
I wonder if he'll come on do an interview with me. I mean, no, I'm serious. I look at this stuff and I'm reading story.
I thought he hates your guts.
I've never met the guy. I have no idea. But I'm looking at this stuff, and it's not just Silver Doctors. It's all of the retailers. Blowout sales, and, you know, Chris Twain last week selling his Eagles, his personal 2005 legendary Eagles at only $22 with free shipping. And all of this, I thought we had shortages. I mean, is anyone going to answer for all of those stories last year?
Remember that video I made last year about the silver shortage? Or you don't?
Yeah, I do.
Yeah, it had like 5,000 views. It was like a silver shortage myth. And I got so many nasty comments there. I've told you many times, but I wonder what those people think right now if I were to do a video like that. I wonder if I'd get all that negativity that I got, and you got as well.
I'm sorry, I missed everything you just said. I was
really
on the phone with someone, so I'm sorry. I hate to have you repeat that, but please do.
Okay. Remember, so that video I had with 5,000 views, right? The silver shortage myth. And I don't know if you remember the comments on that video.
Yes, I do remember the comments on that video, and
yeah, they went like ape shit on me.
Right.
And the same thing happened to you when you're doing video after video
after video, telling people this is all bullshit. Yes, I remember all that. Yes.
Right. I wonder what the people would think of that right now.
I think that
I were to do it or you were to do those videos, they'd probably say, "Yeah, you're totally right."
Yeah. Listen, guys, I have to run. I have a call I got to take. I apologize. I got to go. But Rahul, thanks for having me on.
All right. Don, where can people get you before you go?
Then give me www.whogivesashit.com.
All right. And Panama, where can people find you?
StockTwits and Twitter.com, Panama Orange, both cases. So.
Awesome. Good places to go. Day trade shows where Don's at, so people should go there. Anyways, thanks for coming on, guys.
All right.